Bismillahirrahmanirrahim. Assalamu alaikum. In today's video, we are going to learn that how we can pass the journal entries of salaries. The salaries which are on time, the companies are paying at the end of each month, and the salaries which are not on time, like the February salary, the companies are paying in March. So it will include the accruals and the employees' deductions like taxes, like their loan deductions from the salaries. So all the journal entries we are going to learn today inshallah in this video. So let's start with the beginning. We have here an example salary sheet here. The salary sheet includes 4 employees. You can add even 100 employees, the format will be the same. Here we will be having a gross salary including the total allowances, overtime and etc. everything. So the gross salary will be this much, 16,982 for all the employees. And here we have loan deduction. The company paid loan to the employees and now they are deducting from their salaries. So here there is a net salary at the end, it is 12,482. So suppose this company is paying salary on 28 February 2021 at the end of each month. So staff salaries, profit and loss expense account will be debit with gross salary. The gross salary is the total expense of the company. So keep in mind you need to make debit this 16,982 instead of 12,482 which you are paying. So this is the total expense of the company as salary expense. Now each employee having a different ledger account in the system as a receivable in a current assets. So when we paid them the loan, we make them debit, okay, and now they are making the repayment of the loan to the company. Now we are making deductions, so their ledger account will be credited with the each individual amount deduction, like 500 here for employee number 1, 3,000 for employee number 2, 500 for employee number 3 and so on. Now the company is paying the salary by bank transfer or the cash or the check, so that account will be credit, which is current asset, with the net salary which is paid to the employees, which is 12,482. Now let's move to the second scenario where the company is paying the February salary in March. Here is accrual comes here, accrued salaries come here. Now we need to book the expense of February in the month of February because the employee worked in the February, so the expense is related to that month. So we need to book that expense in our accounting system. So staff salaries, profit and loss expense account will be debit with the same amount 16,982 as a gross salary. The deductions from the employees, like they are repaying us the loan, so all amounts here 4,500 for the individual employee account will be credit. And at the end there is one thing is different here, accrued salaries account in the balance sheet as a liability, current liability, which will be credited by 12,482. So this is the liability of the company, which company has to pay in March to the employees. Now when the company is making the payment of this liability, what entry they are passing? They are passing accrued salaries account balance sheet liability, this account which we made earlier as credit. Now when we are paying the salaries, then we need to make this account as debit. 12,482 is debit. Bank payment or cash payment, the mode of the payment we need to write here, like that account will be credit. So same amount 12,482. So now this liability will become 0 in the month of March. Now let's move ahead and see here there is a different salary sheet now. Before we were only deducting the advance like loan from the employees. Now there is an income tax and social insurance column is also here, which are going to be deducted from the employees account. Now how to treat this? Now here suppose salaries paid on at the end of the month. Salaries expense debit as I told you earlier with the gross salary, total gross salary. Now the loans deduction will be here as credit, this loan deduction. Income tax payable as our liability will be credit with 849.10, this is income tax column. Social insurance in balance sheet as a current liability will be credit as 339.64, this column. And at the end, bank or cash account will be credit with 11,293.26, which is net salary paid to the employees. Now, these two accounts, income tax and social insurance accounts, are our liabilities. At the end of the month or whenever we are going to submit our payment to the government, we are making them debit as we will decrease our liability and these taxes goes to the government. So the collection will be by the government. So income tax payable balance sheet liability will be debit with this value and this value, social insurance debit, and payment made by bank or cash, that will be credit. Now let's move ahead to another scenario, accrual scenario with the same. Here we will be having a same salary sheet including with the income tax, social insurance and loan repayments. Here, when the salary of February paid in March, it means it is an accrual. So we need to book as expense as an accrual, which will be made as a liability of the company. So staff salaries expense account debit, employees loan repayment will be credit, each individual account. Income tax liability will increase, income tax account. Social insurance account current liability will increase as a credit, 339.64. Here at the end there is a change here, accrued salaries account in the balance sheet as a current liability will be 11,293. This amount is payable, which will be payable in March and the company will pay to the employees in March. Now, when making payment of salaries and taxes to the government and employees on March, now accrued salaries as liability, these three accounts are our liabilities, becomes liability of the February. So these accounts we are going to make them zero while making the payment. Like income tax payment goes to the government, social insurance goes to the government, and accrued salaries, this liability goes to the employees. So accrued salaries account liability 11,293, this amount which is payable goes to the employees, and income tax liability decrease, which will be debit. Social insurance liability will decrease, which will be debit, and bank or cash account will credit with total value 12,482. So guys, this is the complete solution of salaries journal entries. I hope you understand the concept. Please subscribe my channel as it keeps motivating me to create more videos for you. Thank you very much and goodbye.